Hello and welcome to BQ Prime. You're watching Q1 with BQ, and the company in focus in this segment is Tata Spark. We have Mr. Dr. Praveer Sinha, MD and CEO of the company, joining us. Mr. Sinha, thank you very much for joining us. You got a good set of EBITDA growth this year, and the margins also expanded significantly. Can you take us through what was the reason for this expansion?
Thank you very much. You are right that this is the 15th consecutive quarter of growth in PAT. And what is important is that the quality of numbers have improved drastically. And that gets reflected that EBITDA has grown up by nearly 43% to 3,000 crores. First time actually in a quarter we are having a EBITDA of 3,000 crores. What is important is that our existing businesses have done very well. Our Mundra plant operated during the quarter under Section 11. Apart from this, our renewable businesses have done very well. There has been a substantial increase in the renewable PAT as also in the EBITDA in the quarter, and that has got translated in the overall EBITDA growth of the company. Similarly, our T&D, especially our distribution in Odisha and the transmission business, the EBITDA and PAT have improved. So I think right across each of our businesses, the EBITDA has improved, and so also the PAT. What is good to see is that now it is the core business which is doing very well. Unlike last year, where in the first quarter and through the year, we had a huge profit that was coming from our coal business, where the coal prices had gone up. This year, notwithstanding the fact that the coal prices are very low, we still have shown a very healthy EBITDA and PAT number. And I think going forward, you will see that this will get further consolidated, and there would be further improvement in EBITDA and PAT in the future quarters.
What we also saw is the addition of nearly 5.8 gigawatts in Q1, 77% coming through renewable energy. What kind of addition do you see by the end of the fiscal?
So we are definitely expecting that many of the projects which are in the pipeline will get executed in this year, whether it is our own utility scale or group captive or even the third party EPC. And those will help us to show a much healthier EBITDA and the PAT numbers. And the exact numbers, of course, are in the range of about 2 gigawatt. But what I can tell you is that out of the 4 gigawatt, which is the order book pending with us, substantial quantum will get executed in this financial year.
Sir, if I look at your solar utility EPC book, it's 17,643 crores. It's grown quarter on quarter. But do you see a bit of sluggish growth coming into this segment?
I think we are touching a very small segment of the market. There is a huge potential and opportunity. And it, of course, requires a little bit of advocacy and education with the consumers, telling them not only that it makes good environment initiatives by them, but also it is economics and the cost of power comes down. And I think the benefit that they accrue is much higher on overall basis. So I think we find that there may be some sluggishness during the monsoon period, but on an overall basis, I do see that there is a huge amount of interest, and how we convert that interest into orders and actual execution. I think we need to continue working with the consumers on that.
What's the update on the solar cell and module plant coming up?
It's going on very well. We are on track, and we expect that within this year, both the module and the cell unit will get fully operational, and we will be able to produce it and use it for our projects in the country. As also, wherever we have opportunity, we will sell some of the modules inside the country and maybe export also.
If I look at the trends for wafers and cells, which has pricing of that, it's almost come back to FY20 levels. Uh, do you see that having any impact or giving an impetus to the adoption of solar going forward?
So the prices have actually come down, and it's good for the industry because that much more projects can come up, which were stalled for last 2 years because of the higher prices of modules and cells. So it's very good development. Secondly, as far as we are concerned, when we are manufacturing in India, we get a certain advantage to protect the Indian industry through the customs duty, which is nearly 40% in case of modules. So I think inherently we are being supported by providing a certain safeguard to Indian manufacturers. And that will help us in ensuring that we are able to produce and have a much better margin that we supply in the country.
Uh, your cell plant may be coming up in by September. That's what I saw in your presentation, and module by first quarter of of the next calendar year. What kind of revenue addition that would add to you going forward?
It's actually the opposite. The module will come up
Sorry,
in October,
module will come in September and
and
cell in
the cell will come in the first quarter of next
calendar. Yeah.
calendar.
What kind of
And so it's going on. It's on track, and we are working towards that timeline. And we expect that the modules will start coming out in October.
what kind of revenue potential that will be for Tata Power?
Right now, since it's only for a certain period, and this is a staggered plant or the staggered commissioning that will happen. So it's not that all 4 gigawatt will get commissioned in the month of October. It will be the first 500, and every 2 weeks another 500 will get added. So it's only over a staggered period that maybe by December or January, before gigawatt of module will be ready, and thereafter of course the cell. So it's still work in progress, and we'll be able to share more details once the actual timelines are firmed up.
So the benefit would accrue in FY25. Is that the right way to say?
Yeah, absolutely. The first full year of operation will be by 25.
Okay. I saw your net debt also going up and the gross debt also going up. It seems that the working capital requirement has increased for you. What is the reason for that?
Well, what has happened is that typically in the first quarter, many of the payments gets delayed from many of the customers because of extreme heat conditions, consumption increases, and they are not in a position to pay immediately. So those all get paid in the month of July and August. Secondly, we've done investments in many of our projects, as we have a very ambitious target to add nearly 2.5 gigawatt in this year. So many of the activities relating to the projects are now going, and the results of that will start coming when these projects are implemented and they start generating power. So I think what you would see is that because of the 12,000 crore of capex that we have planned, there would be an increase in debt, but so also there will be a increase in our EBITDA to cater to the higher debt that will be.
Do you expect your total gross debt or net debt to come down by the end of the financial year, or will it be on an elevated level compared to last year?
It will be, because we are doing nearly 12,000 crores of capex, so it will be little more, but the metrics will be very good. Our debt equity or our debt EBITDA numbers will be very, very safe.
Will you be needing capital, equity capital at some time to fund this entire expansion plan, or is it going to be entirely internal accrual going forward?
It is an internal accrual, and in any case, last year we had equity infusion from our partners who had come into the Renewable platform. So that money is already lying with us, and we'll be using that for our growth this year and next year.
Mm. Uh, Give me a sense of how you plan to expand the entire portfolio, because you're looking at once the entire renewable energy portfolio comes into play, you will have nearly 51% coming from renewable energy. How do you plan to gradually replace the entire thermal power with renewable energy, because the play beyond that, once you clean, so will there be a next set of expansion plan that will come in? How will it play out?
So, as we have shared earlier, we will be adding about 2 to 2.5 gigawatt of renewable capacity every year, which will be a mix of solar, wind, and now pumped hydro will also come. And the objective is that these will be new capacity additions. Of course, the existing assets, coal assets, will continue to work till their useful life or till the time their PPAs are there.
Hmm.
And so it's transitioning that will take place where capacity additions is a every year aspect, while the decommissioning of some of the units will happen over next 20, 15 to 20 years.
Mhm. Give me a sense of how distribution is also doing. T&D was another segment which did very well for you in this quarter. How is it doing? And my question is that, the government is pushing for smart metering and prepaid metering in many cities like Mumbai and other cities. Where are you on that?
So our transmission and distribution are doing very well. Our transmission every year we do a capex of nearly 600 to 700 crores in Mumbai for upgrading the network and also replacement of many of the old equipments which are there, so that the reliability enhances in Mumbai. We also do capex for our distribution business in Delhi, Mumbai, and Odisha, and that's why you have seen that our performance in all these places have further improved, especially in Odisha now that we have stabilized our operation. Secondly, we have already implemented 650,000 smart meters in Delhi, Odisha, and Mumbai put together, and we will over a period of time cover all our customers with smart meters in the cities, and maybe in few pockets of the rural areas. We also have got recently an order of 1700 crores from Chhattisgarh for setting up of the smart meters over there. We have again been very careful and calibrated in terms of which areas or which cities, which states we will go and work on smart meters. So I think our T&D business is poised for very good growth. We had taken last year two assets which were under stressed conditions, the transmission assets in the UP and Rajasthan and Haryana. Work is going on in both of the projects, and hopefully next 12 to 18 months they will get commissioned. So I think we have a very good game plan on our transmission and distribution business, which we will implement over a period of time.
Sir, give me a sense of how the working capital requirement for a power company like you change with prepaid metering and smart metering coming into place. Does it eliminate to a large extent the need of working capital, because payments will now be prepaid instead of being delayed by a few months?
Yeah, absolutely. And you would see our debtors, number of days of debtors, which was last year in the first quarter, 58 days, has come down to 47 days this quarter. And it will further get improved in the subsequent quarters. So, what we do is whatever we build, we are getting paid in most of the places. We have 100% collection efficiency. And we expect that we will be able to do that much better with our smart meters. So I think this is only supporting our program of ensuring that whatever we bill, we collect 100%, and to that extent, our working capital is controlled.
Finally, sir, Section 11, which has helped Mundra operate at a higher efficiency, till when do you expect that get to be there, and do you expect an extension coming in as well?
So it's there till the 30th September. Last year we saw the extension, so maybe it might get extended this year also. So let's see how the requirement of power is there in the coming months, and based on that, the government will decide.
What is your projection for requirement, sir?
Projections this year went a little off because of the weather changes. We were expecting 230 gigawatt in summer months, and didn't cross 220. Very difficult to predict what sort of weather conditions would be there. But typically, October is very hot and also very humid. So we do expect that there would be a good demand of power.
Mr. Sinha, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Thank you very much.